All right, welcome to the Tuesday Tidbit. This Tuesday Tidbit is what is an interest-only loan? Well, it's kind of in the title, right? So, an interest-only loan is a loan where you are purely paying interest. You are not paying any principal. You're not paying down the balance of that loan when you make a typical mortgage payment. A home equity line of credit is an example of a loan that is commonly an interest-only loan. Now, the question you should ask yourselves, okay, is what happens at the end of the loan term? What happens after I've made all those interest only payments? What happens then? Well, a couple different things could potentially happen. You might have what they call a balloon payment. A balloon payment is where the lender says, hey, look, you owe us all this money by this date. It's a balloon payment. That amount comes due in full at this period of time. Okay. Another option, and this is also very common with the home equity line of credit, is you might enter a second stage of your loan. You might have interest only payments, and then you might enter like a fully amortizing term where you start paying both principal and interest on your loan. Interest-only loans were extremely common pre-2008. Before the housing bubble popped, it was one of the loan types that caused a lot of delinquency. People weren't making any progress on their loan. They weren't paying down the balance on the loan. So a lot of times they were starting to, if their value slipped a dollar, they might actually go a dollar underwater. So it did have some kind of negative connotations associated with it because of the housing bubble popping. It's not necessarily a terrible option, but you really need to ask additional questions. How much higher is the interest rate? Most lenders are going to charge you a higher interest rate to do an interest-only loan. Well, that's a pretty big drawback. Is there a balloon payment? Is there a second period of this loan where I am paying both principal and interest? You need to ask all those questions up front. Interest-only loans are very uncommon right now. It's very rare to find an interest-only loan. Some very financially savvy people like interest-only loans because they figure they can put their money to better use elsewhere. So they just want to keep their payments down, keep more cash on hand, and invest that cash elsewhere. So it is a common vehicle that a lot of really intelligent financial gurus look at. It does have some drawbacks. You need to be aware of those drawbacks and plan accordingly. Also, most interest-only loans are also adjustable rate mortgages. It's not always the case, but that's very commonly the case. So if it's an adjustable rate mortgage, what are those rates? How often will those rates adjust? Is there a limit to how high those rates can adjust? You need to ask all those questions if you're looking at a potential interest-only loan. Thanks so much. See you on the next one. Bye.